Hi, thank you for joining us here at Tax Talk UK, where we talk about all things tax and other important things that you need to know about if you are working for yourself, running a small business. So we've been asked to cover for a self-employed person, how do you account when you've used your business account for personal expenditure? So, and before I talk about that, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you need to, as well as finding other information that we have available on a whole wide range of topics that will help and guide you in running your small business. If you want to be notified every time we upload new information, then you should also turn on the notifications. So on to today's topic then, and the answer to the question, which is I've used my business account for some personal expenditure. How should I account for that? And it's important to say that in this video, I'm going to talk specifically about sole traders when I talk about self-employed. So in another video, we cover the director's loan, which would be for those trading as a micro-entity limited company. So you're a sole trader, you're completing the self-employed section of your personal tax return, and this is how you would account for personal expenditure. So of course, mostly we're going to be the people that are going to be asking this question are also going to be, much as the person that asks, going to be using Making Tax Digital software. So the chances are you've linked up your bank account. For good practice, you've likely got a separate account that you run your business transactions through than your personal ones. Remember, there's not any specific regulation that says that you must have a separate business account to your personal account. Certainly not from an accounting or a HMRC side. Although your bank may have restrictions that don't allow you to use the personal account you have. It is good practice in any case to have a separate account that you run your business transactions through. It makes it much easier to manage. And certainly if you're already using Making Tax Digital software, or you will need to be soon, then it means that you can connect to the bank feed and you don't have to be dealing with a whole load of transactions that are nothing to do with your business, because you've got your personal separate. But it's still inevitable from time to time something might slip through. You might inadvertently use the wrong card. You may think that something's allowable and then later discover that it's not, and it's to be treated as personal. So what do you do in this scenario? So basically, if you are paying yourself from your business, you will remember from what we've talked about in other videos, sorry, that that you and the business are the same. So it's just the same as if you have your personal bank account and you perhaps have a savings account and you're just moving money between the two. But of course, if you've got a business account that you are reconciling, then of course you need to be able to do something with the business. And also, of course, you're going to want to know for your, even though that you are taxed effectively on the profit of the business, because you are the same, you and the business are the same, you still, for your own purposes, want to know how much that business is supporting you financially, and how much you're actually drawing out, either as specific regular monthly payments or ad hoc payments, or when you've just used the card or paid something personal out of your business account. So you're still going to want to know within the accounting period how much has that business funded you financially. So for this, anything that you're drawing, you're going to be simply putting to owners drawings, and that would be the same as if you're set up as a partnership, partners drawings. But of course, in that scenario, you'd have an account for each of the partners. And so most of the Making Tax Digital software will give you a basic chart of accounts or categories for you to allocate your transactions to. If it doesn't, or perhaps you might need to have a new one created for some reason, then it's important that if you are creating an account for your money, much as you might think of it as your wages from your business, it isn't technically wages, it is you drawing from the business. So therefore, it needs to be the account type that you're creating in your chart of accounts, in your Making Tax Digital software, needs to be in the range of an equity account, and that will mean that it will sit in the bottom section of the balance sheet, any transactions that you put to that account that you're creating, because of course it's not a profit and loss transaction, because it's simply you taking the money out of the business. You and the business are the same, because remember, we're talking about sole traders today. So it's not an expense of the business, it doesn't reduce the profit for tax, and that money that you take out isn't personal income. The personal income from self-employment is simply the profit that the business makes. That is what you will be taxed on. It's completely irrelevant whether you leave that money in your business account or take it to your personal account. That will not affect the tax that you pay as a sole trader. So I hope that this helps you to understand how you should treat any personal money that you've taken out of your business when you're operating as a sole trader. As I mentioned earlier, please do take a moment to subscribe to our YouTube channel, and thank you very much for watching. Goodbye.